It is I, Johnny Heikinashi, the great on these Wall Street charts. And today we're going to do something special. I'm going to let you see into the windows of something that every single trader should do. Every time I trade, I'm recording my screen. And then I go back and I rewatch my highlights like a professional basketball player. All right. This is a must, right? You go back, you look at your trades. Even when you have good trading days, you go back and look at your trades and see what you could have done better. You go back and look at your trades and see how you were behaving in monkey mind, if you needed more patience, if you didn't. So this is what we're going to do today. Today, in about 22 minutes, I made $520. What would $520 do for your life? I don't know. A lot of people work all week in America and don't make $520. So let's go right into it. We're going to dive into it. The computer's going to be moving really fast, but that's so we can get through these trades and you can understand the psychology that was going on in my mind at the time I was taking these trades. All right, so here we go. We're starting off. Now, right here, you see I take a trade right in the open, okay? Now, this is probably why it happened like this is because I was trying to get the screen up and able to record it, and I didn't want to miss the trade. So I'm taking this trade, and my idea behind the trade right now is that it's going to move up. Market's moving up. We consolidated right here on my macro chart. This chart you see where my arrow is, this area of consolidation. That means the market is trading sideways. And then they broke out. I don't really have full confirmation yet that the buyers are back in charge though. This could be a fake out. And then over here is the same thing. This is my structure chart. This is where I typically look for my setup. And this one over here is my trading chart. This is the chart that I use when I'm entering into a trade. Right? I want to get the best price possible, so I'm looking at a time frame that's way smaller than this one. We actually have how you can figure out your time frames once you come to our community, which is free for the first 200 people. I'm not giving away our software to anyone else for free, so I suggest you hop on that now. But we have a number sequence that we use to figure out what time frames are the best time frames to trade on. It's not on the internet. It's not on YouTube. You're not going to find it, and most people don't know how to do this. Can I get a Don DeMarco for that? All right, here we go. So I took this trade here, and I got in, and I guess what I saw was I thought this was a swing. It's not a swing. And now you're about to witness what happened to me. Okay, we took an L. All right, so we just had to invest in the market. I am trading on that particular trade. I think I was trading a couple of contracts. I can't remember. I think it was like 2 contracts. So it's $10 every tick. Or for those of you who trade the Forex market, that was $10 per tick, right, as I played that one. So first one was an investment in the market. It didn't work out for me, and I bought, and the sellers are still in charge. I'm thinking the buyers are in charge. It is possible that I might be early. So let's look at what happens next. Okay, I'm waiting. Oh, I enter into the trade again. Things are looking like they're going my way now. Maybe, just maybe, the sellers will come down to this point here where this dynamic resistance line is. Now, however, remember, I told you this is a poor trade. I didn't acknowledge the charts correctly, and this was never a swing. So I based my dynamic resistance line on what I perceived to be a swing, and it wasn't a swing. And let's see what happened when I did that. And this comes from practice. And as you can see, boom, oh, it didn't work, okay? We took another L again. Bruh. All right, so we're down 2 trades now. You know I only have 7. I got 7 bullets in the Glock. That's all I have. All right, so we need to keep it going, keep our faith. I do believe that the market is still going to go up, being that we have a swing here, then we have a higher high here, okay? And I do believe it is. I just made a mistake. And I thought I saw something that I didn't see. So let's see what happens else. Let's see what else I do. Okay, we got a little pop-up telling me that our contracts are about to roll over. As you can see, I'm down, and boom. What happened there? All right, I'll explain to you what happened there. The price, I got in again thinking it was time to buy. So I'm on my 3rd buy with the market. This is, I got scared. I felt like after reassessing the charts, I think at this moment I acknowledged that that was never a swing. And so now I don't know if the buyers are in charge. So I hurried up and got out the trade. This is trading. You can't always set it and forget it. Sometimes you have to trade. You have to say, oh, let me break even. Oh, let me move it up. Let me get in. Let me get out. We're here to facilitate trade and grab things at the best price possible. Okay? So what I did with that is, I essentially tried to get it a little bit above break even to bring down some of my red that's on my charts, as you can see right now. The charts are bloodied. Okay? So that one I didn't take an L. We're going for it again. We're waiting. I'm starting to figure out, oh, wow, okay, this could happen. Now you can see me redrawing my lines. Now, as you saw me draw this line on the macro chart, that's a place that if I see the price come down here, my idea about the market and the buyers actually taking charge again is done. I now would believe that it was a fake out and they never had intentions to go to the upside. So you'll see me drawing a few lines on the macro chart here to keep my mind strong enough to believe in my trade, to believe in my ideology of what I feel is going to happen in the market. All right, let's go. Boom. All right, so you see what happened there? I took I took another one.
Oh, shit. Here we go again.
All right, so I took another loss. I'm probably like at $400 or something right now, or 500 in negative. I can't really see. Next time, guys, I'll make sure that this account is at the top so we can see it clearly of what's happening. My apologies. I'm new to all this, so I'm gonna keep it a bean. I've only sold our software to prop firms and hedge funds. So for me to get it to you guys retail, I have to do all this computer stuff that I'm learning on the fly. Okay, so let's continue. All right. On my fifth trade. Oh no, that was my fifth trade. Okay, so that one was profitable. Let's go back and look at what I did because I thought that was a loss. We need to go back. Let's go back and see how I played that one. And it must have been a really good trade because, okay, boom. We're in the trade. Let's slow it down. Okay, slow down the speed so we can see exactly what happened. So at this point, you'll see that I sold the market. Okay, and the reason why I sold the market instead of buying, and I changed my idea, which is sometimes that's what you got to do. You have to pivot. If you see them starting to move in a direction, sometimes you got to pivot, okay? And so I pivoted. I sold because I had a feeling they would come down here and test this area. And I remember thinking, oh man, I didn't see a green light on my macro chart. They could even possibly go even lower. And when I seen that we started to create multiple red candles to the downside, I said, I can get a quick scalp out of there that would get me out of the hole. And that's why I took that trade. I took that trade because I was like, okay, they still possibly could come way down here. Bruh, in the NASDAQ, that's a lot of money. It doesn't look like a lot of space in between, guys, but it's a lot of bread. Trust me. All right. So as you can see, I'm in the trade and you'll watch me. Normally, I'm holding the trade 150 ticks. That's why you've seen my take profit, which is this green here, my accept profit. You'll see me move it up. I moved it up because I wanted it around this area. Okay, watch it. Let's go. Let's see if we can scroll back. When I entered the trade, where the accept profit was. See where it's at? See how I grabbed it with my mouse and then I moved it up? I'm going for a quick scalp to get me out of the red. But my mind is still stuck on the market is going to go up. But if it's going to go down a little more, I want to get a bit of that. I want to get up in that, right? Let's go. Okay, you see the market moving. It's shortened. You'll watch me move it up. Okay, at that point, I moved it up to a spot where I felt like I could scalp. And when I did, it scouted me. Whatever I was negative, since we couldn't see it because I didn't have it up right, but whatever I had negative plus, which probably was about $500, plus $440 is in the account. Can I get a Don DeMarco? All right. Now here, normally I would walk away from the computer. But I was like, nah. Because I want to see if the market is going to continue to swing up to the upside. So I stay and I want to wait for a swing. I want to wait for price action to show me that they're going to continue, right? But I don't want to be greedy because, to be honest, my goal is only $200 in this particular account. So we're watching the market move. Let's speed it up again. Let's get it back to where it was. Boom, put it back there so you can see what's happening. Okay, we're still watching the charts. I'm waiting patiently for the ability for the market to just show me that the buyers are back. Now, I know at this point, a lot of people are going to think that the sellers are back in charge, but I know better. Why? Because I have these two levels right here on my macro chart explaining to me that, hey, sellers aren't in charge unless they break these levels. So we still got a trend to the upside, especially after a consolidation period in the market. So as you can see, I start pulling up my 15-second chart. The 15-second chart is going to help me get in a better entrance. So whenever you start seeing me work the 15-second chart, you know that I'm looking for an entry point. I'm not using it to trade. I'm getting ready to say, okay, if it does this on the 15-second chart, I'm in. And typically what that'll do is, because it's 15 seconds, it gives me the heads up when I go to take my trade on my 2-minute chart for profits. Okay, let's skip that. See where it's going with that. Skip that. Trying to find where I took the trade. Oh, okay. So you'll see me checking. You seen me check the 1 hour. If you were paying attention to the macro, I checked the 1 hour, the 4 hour, and the 1 hour and the 4 hour. I checked it because I wanted to see if I still was correct about the trend being up. I wanted to see if anything else had, if it had played out to where I can see maybe a swing is being created on a higher time frame that I wasn't paying attention to, or maybe there's a level that I didn't pay attention to. I checked, I didn't see anything. So if I didn't see anything, I went right for it. All right, you see, I'm into the trade now for a long. I'm going to get the trade that I've been trying to get all damn day. So you could say this is a slight source of maybe a little bit of revenge trading and trying to soothe my ego. And that's why I continue to trade after making $400. But as you can see, I completely crushed it. I didn't be greedy. I just wanted to know that I was right. And we did the damn thing and we made it happen, locking up, what was that, $545? I had been waiting for that trade the entire time. I tried to take it and I took 4 times I had to invest in the market, meaning the market went against me and it went in the red. But eventually I kept to my strategy. But what helped me stay to my strategy was to keep my psychology on point. I needed to draw these lines over here to make sure that they are going to continue. And when I saw that the market started to not even come close to these lines over here on the macro chart, I said, just be patient. All you need to do is be patient. And so I stayed patient and I got into the trade, and that's how we did it. Can I get a Don DeMarco? This is one account today. I did this trade in 22 minutes. That's $500. What would $500 do for you? I don't know. A lot of people, I know what to do for a lot of people. Might be a Mercedes-Benz car note. I don't know. You tell me. But yeah, So that's the trade in this account. Let's go over the next trade I took in another account, and we'll break that down step by step, giving you an idea of what goes on in my psychology, why I'm taking the trades, what I'm doing, why I'm drawing these lines on the charts. Remember, if you want to do it, you can do it. Take your time, do it right. You can do it. You can get your money right. It is I, Johnny Heikinashi, Master Sensei of the Freedom Nation.